All right, welcome everybody to our very first public webinar of Forex Investors Alliance. I just want to thank everybody for joining us. We're all here to, for the same goal. We all want to learn more about the Forex market, and we're thirsty for knowledge. Everyone's very thirsty for knowledge here. And, when you can get it for free, why not take advantage of it? So I'm going to start by playing the slideshow for you guys. All right, Forexia, Forex Investors Alliance. I want to also give a big shout out to our guest, Zachary from Tradin. He is the co-founder of Tradin Pro, or the Tradin organization. Very amazing, profound group of leaders over at Tradin. I really suggest you guys check them out. If you have anything to say, Zachary, you are welcome. I don't know if you have your mic muted still.
Yeah, can you hear me right now?
Yeah.
All right, awesome. Yeah, what's up, everybody? I just wanted to say a quick hello, and I just wanted to say thank you, Dylan, for the kind words. For everybody else who is on here today, we appreciate your time. We're going to be looking to share a lot of value with you, and just make sure that you come prepared. Make sure that you eliminate any distractions. Make sure that you have a pen and paper, a notepad, whatever it is that you do to take down information, because what we're going to be sharing with you today, it is for your benefit with the best interest in mind. So with that being said, I do want to pass the floor back over to you, Dylan. I know everybody is anxious to see what we got to share today, so take it away, man.
All right, exactly. Thank you very much, Zachary. All right, moving on to a new introduction to Forex. Very few people know the knowledge that will be shared here. Like we said, be prepared to take notes, guys. There is a reason 90% of retail traders fail, and we're going to reveal to you this reason. Forex is manipulated. Can you believe that? How could Forex be manipulated? How could you possibly move a market so massive? I mean, the Forex market moves $5.5 trillion a day on a good day, on a daily basis. Whereas other markets move, 500 billion, not even close to the Forex market. So how is it possible to manipulate a system like Forex, or, like any type of market, where it being the Forex market, the equities market, or the stock market? How can you manipulate a system, any type of system like that? First, it has to be created in a way that it can be manipulated. So they create the system, all right? They teach the masses how it is supposed to be used, or how it's supposed to work, how they intend, how it was intended to work. And then they manipulate the system to their benefit. And this may not make sense right now, but while we explain a little more in depth about the whole manipulation process, it'll make a little more sense to you guys. The market does not move randomly. It's impossible to manipulate a system if it's moving in a random order. So there's a lot of, possible thought out there that the market could be moved in a, it's just moving in a random order, but it can't, it's not possible to move or manipulate a market when it's moving randomly. So the system is set up with zones, trend lines, support and resistance, or supply and demand. It's basically made to seem very simple to the average trader because, who wouldn't want to take part in a $5.5 trillion market when all you have to do is draw little trend lines or find invisible lines on a map, So it's made to seem very simple when in reality, trading Forex needs to be thought out as a business. It's something a lot more profound than what I'm saying is it shouldn't be thought out as a hobby. Like many people take Forex and start it as a hobby and then blow their account and realize, wow, I can't do this as a hobby. I need to take this seriously because it's a serious matter. It's a business. So the system is designed to fail. The system is manipulated in a way that induces fear and panic to the retail traders or the retail trading mentality. The main goal is to get you to place a trade without set intentions or, spike the market in a way that the retail trading mentality or herd goes one way and then the smart money goes another way. It manipulates the market to their benefit. So they have specific moves that are used to get you to make poorly thought out trades. The smart money wouldn't have a $5.5 trillion market to play with if they didn't have a special way to manipulate it, if they couldn't, figure out how to manipulate it. So there's people, and what I say by smart money is, I mean, the banks or hedge funds dumping trillions, millions of dollars, billions of dollars, I mean, insane amounts of money into the market and moving it in a specific way that gets you to place a trade without set intentions or that induces fear into the regular, retail trader. So strategy is only 20%. What does that mean? Strategy is 20%. Money management is 20%. And emotional control is 20%. This represents trading as a whole. Why is emotional control so important? When trading, emotional control is one of the most important things. if you don't have control over your emotions when you get into a trade, and you don't have set intentions, you're not going by your plan, first of all, your emotions are going to be going wild. And when your emotions are going wild, your strategy is going to fail. Your money management plan is going to fail. Everything will fail. Everything will collapse on itself because of your emotions getting a hold of you and, not, I guess, taking control over you. Your emotions will take control over you, and a what you thought was a good trade will turn into a nightmare. So emotional control is definitely a key aspect in trading. The fear of missing out, treating trading like a business, having a plan, trading the plan, placing a trade, and walking away. So what do I mean by these things? Fear of missing out. There's so many opportunities in the financial market, in any financial market, being that the Forex market is the largest market. There is also a lot of risk involved in the Forex market. But the fear of missing out definitely plays a key role in your emotions on the emotional side of things, because if you're afraid that you're going to miss out on a trade, you might as well not even trade. You can't have that mentality, because the market's always going to be there. It's always going to be full of opportunities. Okay? Treating trading like a business. You have to be serious. Trading isn't a game. It's not a hobby. For some people it's a hobby, and most of them blow their accounts. You have to give this your all. You have to have a plan, trade by your plan. You have to have some type of emotional control over yourself while you're trading, and get yourself in the right mindset. And placing a trade and walking away. When you find a trade, or when you place a trade, place it, set your stop loss, set your take profit, and walk away. Just set your phone down and walk away, or take the app and close it. Just walk away. Don't even look at it for the next hour, 2 hours, all day. And if it plays out your way, it plays out your way. But if it doesn't, then that if you went by your plan, you knew how much you were going to lose already. You knew how much risk versus reward you were looking for. So even if it doesn't go your way, it's an experience. It's a learning experience that you can learn from. Your trading plan, all right? Your trading plan is one of the key aspects of trading. It's, like I said, up there with emotional control. But if you guys don't have a trading plan, you're basically planning to fail. And what I mean by that is, when you're trading Forex, there's so many ways that it could go, and it could test you. It could test your emotions by the way that the system is set up. And so you have to have a plan of action to go and, I guess, defeat this market, or go through your plan and get what you want to out of the market. So you have to ask yourself, am I buying an uptrend or selling a downtrend? You have to look at the different time frames on the Forex charts and ask yourself these things. Am I buying an uptrend? Am I selling a downtrend? you know, because if on the 15-minute chart, the price is going up, but it's hitting an area of resistance on the 1 hour chart, you wouldn't know that by looking at the 15-minute chart. So you have to be aware of all the different time frames. Be aware of the news. The news is a key factor when trading Forex. There's definitely major news events playing out all the time on a daily basis that affect the market. So you have to be aware of the news every day when you're trading, especially if you're in a trade. Be aware of the country that might be affected by the news or the currency pair. Always know what the risk and reward ratio is before each trade. You should always write down or know your risk reward ratio. You should always have a positive risk reward ratio, meaning at least 1-to-1, if not a lot more, 1-to-2, 1-to-3 risk reward, where if you get 50 pips, you could lose 25 pips, or you're comfortable with losing 50 pips to get 300 pips. So know your risk reward before each trade and then let it play out. Ask yourself, what is my first target and why? Where is my first target going to be and why is it going to be in the place it's going to be? Never let a loser turn into a loser. All right, it should be never let a loser turn into a loser. Never let a winner turn into a loser. What I mean by that is, if you're in a trade and you're $10 positive, set the, or let's say 20 pips positive, set the stop loss to break even. Because then you can go throughout your day not worrying at all about the trade. If it hits the stop loss, it'll break even. No risk involved. It's a risk-free trade. So never let a winner turn into a loser. Do not revenge trade. If you had 3 losses and then you're getting really upset at the market and then your emotions are getting the best of you and you just go all in on a stupid trade. Don't be that guy that blows his account like that. Because I know that has happened to a lot of people. So never let that happen to you guys. Know how to manage your emotions and always have your trading plan ready before each trade. Have at least 3 confirmations. What do I mean by that? Have at least 3 bias confirmations where you can say, I think it's going in this direction because this, and this happened. So whether it be a set of railroad tracks, a pin to the top, a pin to the what I mean by that is just a set of confirmations to let you know what price is doing and am I in the right emotional state. So are you in the right emotional state to be trading? What do I mean by that? All right, if you had a horrible day at work, you don't want to get on Forex and then start trading right away. You want to let your stress level down and just, meditate. Do what you need to do in order to be in the right state to be trading, because that is a key factor in trading, the mindset, and knowing at all times what type of emotional state you're in. So the first concepts all traders learn are the basic concepts like support and resistance, trend lines, zones, channels, consolidation. Support and resistance is when price bounces off support and resistance. Once support is broke, it becomes resistance. Once resistance is broke, it becomes support. These cycles are based off of fear and greed. Excuse me. Price may linger around these key areas to gather orders. So, trend lines. Trend lines are support and resistance zones drawn out. We're going to show you guys at the end of the webinar how to draw support and resistance lines, support and resistance, as well as trend lines, and different types of zones, and also finding consolidation. Trend lines are support and resistance zones drawn out. Price seems to respect certain lines or zones in the market, and trend lines become more respected as they are tested. Zones and channels. Zones are certain areas of resistance and support where the price is highly manipulated. Zones become more respected when the more they are tested. Channels tend to occur at the same price range. Channels are similar to consolidation zones, being they are used to gain positions or contracts. Consolidation. Price moves in a certain range. So consolidation is used to gather orders. Retail traders place orders around consolidation, hoping for a breakout. And smart money can send a wick to the top and bring all the orders back down and, basically screw the retail traders that have orders set on within consolidation zones. So they're used to gather orders and then basically used against the retail traders by the smart money to move the market in a certain way for their pump and dump system that they set up. There is always a breakout of the consolidation zones to trap the orders. The Asian session usually consists of consolidation. Analyzing the charts. Finding the support and resistance zones. Charting trend lines. Charting consolidation. Charting channels. So our main objective is learning how to chart these basic patterns in the market right now. That's our main goal, especially for new people that are just learning to trade Forex and have just started. You guys have to learn how the system works before you can learn how it's manipulated. And once you know how it's manipulated, you'll understand the market a lot more and how it moves and how the smart money works and the smart money's next move. Because if you're on top of their next move, it's always a big move. They're dumping huge amounts of money into the market, and if you ride that wave with them, you'll have a great risk to reward ratio turnout. All right. So, Zachary, do you have anything to say about, you know, the basic forex patterns or forex knowledge that you think the average trader starting forex should know about? What do you what do you think?
Yeah, most definitely. I mean, just to share a little bit of insight, I'm not going to go too deep. Um, but I feel first and foremost, the biggest thing is mentality. And when I say mentality, I mean when it comes down to your approach in how you look at the market, how you perceive your goals, your expectations, your level of belief in regards to feeling that you're actually going to be able to do this and to trade successfully. And I mean, it ultimately comes back to how how much preparation and time you put in before the market is even open. And I'm going to just assume that everyone on here does have some prior experience with the market. But if you haven't, officially gotten started with trading, the first thing that I would recommend to you is to do your due diligence, to spend more time on the logistical side of having a plan of action so that you can know each and every single day what it is that you're looking to do. There are some very key things you can consider, such as how much time are you going to put into trading? What hours of the day are you going to trade? What are your rules for your account going to be when it comes to entering and exiting trades? How much of a drawdown and risk tolerance are you able to handle emotionally? There are so many questions you can consider, and I mean, I'd be happy to continue to just share a few more, but I feel that at the like out of everything, like I was saying, the most important thing is your mentality, and to go beyond, that state of fear of loss or fear of missing out on a trade, like Dylan was saying earlier. It's very, very important to note that the market is such a unique place. It's like a piece of art. And there's always going to be another opportunity. There's always going to be something else that you can trade. And just because, the market, quote unquote, is choppy or doesn't look like it's presenting any opportunity, you should look to question the why behind that. Always question the why. There's always something bigger going on, whether it's blatantly obvious or not. And ultimately, just bring it back to, again, having a plan, using affirmations. And I believe that's what Dylan is going to be getting into here next. But there is power within using I am statements. And something, whether you've been trading for a month, 2 months, 3 months, 5 years, 20 years, something that I would really recommend to you to do each and every single day so that you can approach the market with a crystal clear mentality is to have some sort of trading routine, a pre-trading checklist, so to speak. And this is really just so you can come into the market and approach it as a business, and so that you're not bringing in other stresses from the day, and you're just really able to focus in on trading as a business successfully. So, that is just what I wanted to share right this second, and I'll let you go ahead and get into some more details about the actual plan of action.
All right, yeah, thank you, Zachary. Thank you very much for sharing. Um, and like Zachary said, affirmations are so powerful. I mean, they're in everyday situations, in the everyday life, not only for trading or traders. It works in the everyday life because how life is set up is You are the creator of your reality. So you create what you think about. You create whatever comes into your mind, whether it be negative or positive. What you create, what you put in, you see. It basically is like a mirror. What you put out also comes back to you. So affirmations just go hand in hand in trading in a way that is very profound and can help any trader in any situation. Um, I'm just going to go over my trading plan and affirmations right now so you guys can maybe take notes if you want to. Hopefully, I'll provide some insights for you guys to make your own affirmations and your own unique trading plan fit for you. So, my trading plan decides what is a good trading opportunity. Number two, I will keep a trading journal. I will log my trades every day. I will keep a trading journal. I will consistently be a profitable trader. I am in control of my emotions. The market presents unlimited opportunity. I'm happy when I follow my trading plan, and I feel pain when I deviate from it. I cannot control the market, I can only control my actions. All right, I see so many people, blaming the market for what happened to them. And if they realize that, if they go back and realize that, it wasn't the market, it was their fault. They didn't, whatever it be, follow their plan, or there's always something you can take away from that failure and turn it into a learning experience. So I am a professional trader, not a gambler. This goes hand in hand with the business, treating trading like a business and not a hobby, not being a gambler. It's a very touchy subject when it comes to trading, and 90% of people fail. 90% of retail traders fail because of this reason. I deserve to be successful. I believe everybody deserves to be successful every day in their everyday lives. Um, and that's a very powerful, very, very powerful affirmation. I am successful. I am a successful trader. Trading is my business. All right, so this is basically my trading plan. I look to see if I have analyzed the chart thoroughly. Have I analyzed it? Have I looked at every possible bias? Have I charted out all my trend lines? Do I really believe it's going in this direction? All right. Am I using a lot size no bigger than risking 5%? What do I mean by that? Am I comfortable with my drawdown on my account? Am I comfortable with my risk that I'm going to be putting on my account? Because if you're following your plan, you should always know your risk to reward ratio beforehand. You should always know that. That's a very important key aspect. Am I looking at a different time frame? It's always important to take different time frames into perspective and know what's happening on the 15-minute chart and also the 1 hour chart. Am I aware of any news? Is there any news coming out that may affect my position that I might be in? Do not add positions. Do not close. Let the trade play out. Know the risk reward. Logic wins, impulse kills. So, like I said in the one of the first slides, the smart money moves the market in a way